Okay, what is up, YouTube? So I'm going to do a weekly recap of price action and how I traded the week using my strategy. And it's literally exactly the same as the last video. So if you guys want to have like an introduction to it, watch the last video. But I'm going to go through this week and show you guys how it went. All of these trades were taken by me as well, and if you guys want to see me taking them live, you can join the Discord or you can check the Instagram or TikTok where I post the shorts of the video. Alright, so for the first trade, Monday, this week, I was trading on a funded next 50k Rapid Pro, and I'm one day away from paying out because I kind of got fried on Friday, but I'll just go through this. So funded next, the eval is 3k to pass, same as normal for the maximum loss limit. 3 days to pay out, no buffer. So literally 3 days of 500 and you request 1500. So I'm gonna be simulating that here. Okay, so Monday. 9:30 opened. We have our 9:30 low. These are, if you haven't watched the last video, the DOLs that I target are the 9:30 DOLs, the opening range, and 6 a.m. the 4-hour candle. So these are the draws on liquidity, and yeah. So on Monday, we instantly took out the 9:30 high. I'm anticipating us to take out this 9:30 low. So normally what I do, I place the tool position before we even get the setup because I need to see how many points we are away. If we're less than 30 points away from the inverse, which here we're 15, we front run the FEG. That basically means that we just enter before it even gets inversed because the probability that we go all down here and this little leg and we inverse it perfectly is very low, and a lot of the times we just like to break through it instantly and instantly take out the 9:30 low. So I'm gonna show you guys here. So I'm playing it out by the second. So as you can see, we're getting quite a lot of displacement. Okay, so I'm gonna enter there. So as you can see, we just dumped 40 points, and I'm not gonna wait another 27 seconds because I think by the time that those 20 seconds are up, we'd have already taken out the draw on liquidity. So I entered there. My stop loss is always like, so we have the body here and it's always at a 5-point increment of the body outside the gap. So this time it would be a 10-point stop loss. And if I drag the tool, so I always measure my stop loss directly from the gap. So this would be directly from the gap, and then I drag it down to the candle, and from there I just do a 1-to-1, but here it's a bit more. I do this because sometimes we'd like to come back and retap the gap, so that's why I determine my stop loss based off the position if I were to enter here. So now I'm gonna play out price, and look, see, that's exactly what happened. We took out the draw instantly. So that's how it would look. Oh, damn it. I forgot to actually risk because I was too busy explaining. Alright, so anyways, that would be trade 1. So that's our 9:30 play. Now I'm waiting for our opening range play. And this eval is passing 1 day, so don't forget that. So the opening range is this low. I don't think we'll take out the high in this scenario. It looks more like we'll take out the low. So what I want you guys to first acknowledge is, what is price doing right now? I'll give you a little clue. Look at that. High volume chop. And each chop is about 70 points. So that is called high volume chop, and we do not take a trade when we're in high volume chop. So as you can see, I will not be taking anything to this opening range low because of this. So I would just fade any setup. we just got an inverse. Let's see if it hits. See, it doesn't. Why is that? Because look, we are literally high volume chopping. So what I like to do when it's the opening range low and we're high volume chopping, I wait for the opening range low to become the 6 a.m. low. The 6 a.m. low is set at 10 a.m. So now I'm just waiting for 10 a.m. before I take anything. Okay, it's 10 a.m. So now, not only is this the opening range low, this is also the 6 a.m. low. So it's two draws on liquidity, which I want to target now. So I believe that if we were to come down and inverse this gap, we're going to take out the opening range and 6 a.m. low. And if you guys see, we're actually kind of out of this high volume chop now. Yeah, we're finally displacing. So I'm going to draw my tool from the gap. And this trade is, so we need to front run this because look, it's less than 30 points away. So I'm going to play this by the second. And how do we determine our stop loss? So you could do this like this, but the RR is too high. So I like to just have my stop loss, so the RR is always like at around somewhere around 1. So what would be a better place to put your stop loss? I would say probably around here. This looks a lot more ideal for me. So I'm waiting to front run this. Okay, so now it's 10:05 and we had no opportunity to front run. And what I like to do is I only like to front run within the first 5 to 6 minutes of the draw and liquidity being made. So that's why like after like 5 minutes, I think that would just inverse it. So I don't like front running because after like 5 minutes of the draw and liquidity being made, the volatility is a lot lower. So I'm just gonna wait for this gap to get inversed. All right, there we go. So my stop loss now would be, so I could do this, but a 10-point stop is just kind of silly. So if you look here, we actually have a high within this fair value gap. We rejected this fair value gap and put in this prominent high. So I'm gonna put my stop loss here at a 5-point increment, 25 points, and then target 25 points. So that would be from the gap, but I need to do it from the candle closure. So a 1-to-1 would be 26.50 points. So I would enter here, stop loss here, and take profit here. And as you can see, we're no longer really in this high volume chop. We're kind of just trending downwards now. So this TP should get smashed. Oh wait, let me just risk more because we need to pass this eval. So how much would a pass of this eval be? We need around, okay, it's fine. Nice. So just like that. So I hope you guys understand why we avoided this trade because of the high volume chop. And then look, we just start trending downwards and instantly get this setup. All right, next day. So we were supposed to pass the eval there because I accidentally didn't risk enough on the first trade. So it looks like we just have to do it here. So, okay, so this is our 930 high, this is our 930 low. We take out the high, we create this gap here. How many points away? 46. So won't, Okay, so that's some very good displacement. Here's our 930 low. Okay, look, it's 24 seconds into the candle, and we are already here. So in 19 seconds, do you think we're just gonna hold this? I think we're just gonna absolutely flush and take this out. So I'm just gonna enter here. It's a lot safer. Here's the highest body above the gap and a valid stop loss, 30 points or 25, whatever you want to do. Here, a 1-to-1 is 30. I'll take it. I'll take this with 15 micros because that'll pass our, actually wait, I can, I can take this with, yeah, I mean, you could just do 2 minis, I guess, to pass, or just one and extend. Yeah, we'll do one. So we need 610. I'll literally just expand it to 620 for fees. So this would pass our eval. Like, would you look at that? My prediction was exactly correct. And worst case scenario, if you front run and you're wrong, you get stopped, but then you just wait for it to actually get inverse and you get a literal second chance at the opportunity. And then if you lose that, then you're just done for the day. But that's very unlikely in these situations. So there we go, eval passed. So day one, we made a little bit under because I was busy explaining. Now, day two, we made 610 and eval passed. So now we're on our funded stage. We still have 2 trades in us today, so now we're gonna take these because we're now on the funded stage. Here we go. So we're funded now, and our first setup, this is our opening range low, and our first setup that I see is an inversion of this gap. Okay. So how many points away are we? We are less than 30, so I'm looking to front run this. Okay, I'm gonna play it out by the second. Stop loss would be body. So this is the body, 40 points. Here. So 6 seconds, 3 seconds. Okay, I mean, we inverse it perfectly anyway, so that's a W for us. Our entries here. Stop loss is 40 points. TP at a 1-to-1. Here. Bang. So now we're on the funded, and when we're on the funded, if we want a max payout, all we need is 3 days of $500. Right now this is 820, so I'm actually what I do when I need consistency, I take the trade on micros, so I split screen micros and I have all of this drawn on NQ, and I just enter micros and I chart on NQ. That's what you should always do whenever you want to trade micros. So in this case it would be, I believe, 6 micros, no, 7. Yeah, so 7 micros to hit this trade. So we just inverse the gap. I'm gonna play out in 30 seconds. Okay, so that was a very choppy delivery, but we were still ultimately right. I took this trade again live. You can check the recordings. So yeah, nice little trade, very valid. We are currently up 500, I think 563. Funded, we are up 563. We have one more trade to the 6 a.m. lows in us, but we're not gonna take it because we're done for the day, but I'll still show it out for you guys. So 10 a.m. just opened. This is our 6 a.m. low. So now we are waiting for, I believe it's this gap. to get inversed. Okay, so this gap here is 15 points away and it's mitigated. However, we have this unmitigated gap 42 points away, so we'll get more distance. So based off just experience, you'd want to take this gap because this gap already sent price higher. So just take this gap, it's unmitigated, and if we inverse, and it gave no reaction to price yet. So I would be taking this gap, we inverse it here, and I would take it down to the 6 a.m. low. Our stop loss would be 35 points, TP here. Oof, holy stop edge, but we ultimately smashed TP. And what I want to show to you guys, this is where you need to be very careful with what you do. I've backtested this so much backtesting. The stop loss should always be the body, the last body outside of the gap at a 5 point increment. So this is the last body. If we did it here, we would have got stopped. So the 5 point increment is what is literally, this is why you win or lose. This is what determines whether you win or lose, and it's proper stop loss placement. So actually, I should have done, like I said, it's from the gap. So the stop loss here would actually been 30 points. So regardless, whether you did it from the gap or from the body closure, that's how it would have played out. So would you look at that, guys? We have 3 days of, or 3 trades on this day of straight profit. If you're maybe on the Lucid or on another account where there's no consistency on funded, what a day this would have been for you. But I like accounts with no buffer. That's why my favorite account is the Funded Next 50K Rapid Pro account. Alright, so now let's move to the next day. So this day is Wednesday. Okay, we have our 930 high and low. Okay, so what I want you to see here, we have the 930 low, we have the 930 high. And we have this gap already been made. Are we gonna wait for us to sweep this gap and then come out and come down and take this? Or are we just gonna take this gap to here? Because if we wanna sweep out the 930 low first, we're gonna reject off this gap. If we're gonna take the 930 high first, we're gonna inverse it. So let's see. This is the only scenario where I will not wait for one of them to be swept, like I usually would. So here, I would wait for this to get inversed, but if I see price rejecting, I'll enter a short to target this. So I'm kind of just waiting and anticipating. And I would also need to front run this because it's 23 points. And another thing is, when it's like this, I won't front run it like around here when I normally do, because one side wasn't swept. I would front run it around here, so a little later, but more confirmation. So right here, that's where I would take it. Stop loss, so we measure stop loss from the gap. Here, this is the body, 20 points right here. Drag the tool, target a 1-to-1. Right there. So now, we need 500. That's exactly 1 mini. So look at that, we instantly start rejecting like crazy. And we get stopped. So this is one of the scenarios where you get stopped out in price trying to front run, and that was perfectly fine because now we were wrong, but now we can either target this or we can now target this if we re-inverse this. So now I'm gonna wait. So now look, price is back up here. I'm gonna actually re-enter here. Stop loss, now we need a stop loss of the bodies here, so 30 points. And now we are targeting a 1-to-1 right here. So now we're currently down like 500 on the day. So I'm just gonna double risk. I think 18 micros. Yeah, so this would get us our 500 for the day, make the loss, and it'll give us the full. This is some slow. Okay, there, we're break even. And that's TP. So that's, look, this is what I want you guys to understand, yeah? Even though we were wrong the first time, we kind of just paid to lose, and then we paid for the knowledge to know that we're gonna go back up. Because if this was just rejection, we would have wanted a bearish candle around here to take something here, and we would have probably been right. But we didn't, so we front ran it here, and then we got our day. So that's what you guys need to like understand. Even though you lose, you still have an opportunity to make it back. I double risked even because I'm even more certain that we would take it. So I risked double. But if you were to risk not if you were to just risk enough to make your winnings back, then it's fine because you have two more trading opportunities in the day to the opening range and the 6 a.m. draw on liquidity. So even if we did get back to break even on this trade, we have two more trades, but we didn't. And I think so 563. I'm not going to do the exact numbers, just around. So that's like 520. So day 3 on the funded, 520. Yeah, so now I'm just gonna go through the rest of the day and show you guys how it is. So our opening range has been set. So assuming you didn't double risk here like I did, and you just got back to break even with that trade, you would still need your winning day. So I'm gonna demonstrate here. As you can see, it's ninth. We have our opening range. It's 945. Our opening range low, and then we have this gap here and this gap here. I draw it out like this. If we were to get a close below here, I would take it to the opening range low. So this is how it would look. 29 points, meaning we have to front run. So now I'm gonna wait. So we're kind of starting to chop. That normally when price starts doing this, it means that we're just waiting for this to be swept before. So when price like creates the opening range, we start chopping like this. That means we want to have an AMD accumulation manipulation sweep this, and we're either gonna just continue ripping down or we're gonna reverse off of it. So that's why I kind of wait. Yeah. So like I said, we're gonna front run this if we can get it. Okay, I'm gonna front run this here. Stop loss, the last body outside the gap. This is a wick, not a body. However, this is a body. So 40 points, stop loss, and TP here. I'm gonna take this with 1 micro for the sake of showing you guys. So as you can see, 40 points from the gap. We draw it down here, becomes 45, extend this to 45. So like I said, we're either gonna reverse instantly or we're gonna dump through. So that's why I'm gonna go break even as soon as we take this out. So we get the inverse, perfect. Holy, what a diddy candle. I'm going break even. And boom. Again, recorded this trade live. You can check the recordings to see. So there's your second win on the day. So now you definitely have your winning day. Let's wait for the 6 a.m. draw on liquidity now. Let's wait for 10 a.m. 10 a.m.'s open. Here's our 6 a.m. low. So you have two gaps you can choose from here. You have this one here. And you have this one here. This one is 50 points away. This one is 20. So now we're just going to wait for either of them to be inversed. However, like I said, look, this one is mitigated and it had a reaction to send price up. So instead of taking that, I'm just going to play it safe and take the unmitigated one, the one that didn't give price a reaction, or that was even hasn't even been tapped. So we're going to have to front run this for sure because we are very, very close. Yeah. Should I? Okay. Okay. I think I'm gonna get ready to front run now. Okay. So this would be our front run opportunity coming up, and our stop loss would be, where's the most recent body? Right here. So at a 5 point increment, it would be 30. Let's see if we can get it. So 8 seconds left of this candle. 3. Okay, definitely think we're gonna inverse it. Again, I'll take this with 1 micro for the sake of showing. So our stop loss and TP. Break even there. And full TP. Simple as that. So yeah, would look at these 3 for 3 on the day. Or 3 for 4, I guess. But in terms of taking the DOL and being correct, we're 3 for 3. And we have one more day before we get our payout. Let's go to the next day. So we have our 930 high and low. We instantly pump and destroy the high. So now I want us to come down and take this low right here. Very big gap though. Look at this. It's a 50-point gap. So no signs of inversing yet. Okay, now we have our, this is our 930 low and opening range low. Once we inverse this big gap, I believe that we will take it. Okay, wait, how many points away are we? Yeah, so this is going to be a front run. Oh shit. So it's going to be a front run. We should have probably front run it here. So say we were to, our stop loss would be the last body outside of the gap. So this would be 65 points. It's a huge stop loss. Not ideal. Let's see if we can front run it. Similar entry. I would have front run. So I would have front run on this candle somewhere around here. Right here. So we need our winning day. This would be our entry. We just wanted to straight dump after we take the opening range. And this would need to be taken risking. So this would be a 4 micro trade because of how big the stop loss is. Okay, so we took the opening range low, you'd go break even. and you'd get break even on this. So this is our first break even trade. We're gonna go to wait for 6 a.m. Okay, it is currently 10 a.m. It's 10 a.m. We have this here. Here's our 6 a.m. low. Yeah, I'll probably take this. Wait, hang on. Wait, that's not even our 6 a.m. low. This is our 6 a.m. low. Almost got it wrong there. So ignore that. Our 6 a.m. low is this low here. So I'll probably start looking for something once we get down here, and that is 100 points away. If we're not down there by 10:30, I'm off. Okay, I'm off here. Last chance would be 11:15, and nothing. So there we go. This is our break-even day. We still are 1 day away from a payout. So Friday, yesterday. Here's our high, here's our low. So you may ask, can we take this inversion here to this? No, you can't. These are gaps from before session. I don't really like doing that much, especially if we maybe if we swept out one of them, but still no. Okay, we swept the 930 low. If we inverse this, I want the high to get taken. Okay, we don't get an entry there. Let's see, opening range low. Set, and as you can see, we're literally whenever it's like this, I would anticipate that price literally will open and immediately take out the opening range low. If you want, I guess you can literally target the freest 4 points of your life, so you would have got TP, but I don't like ever taking these types of trades, so we instantly sweep it out. So now our last chance is the 6 a.m. draw on liquidity. Let's wait for 10 a.m. So 10 a.m. opened. Here's our 6 a.m. low. Let me make sure I actually mark it out correct again. Yeah, so here's our 6 a.m. low right here. I want to take this to this 6 a.m. low. No? Да. Okay. My bad, someone came in. Alright, let's see. So this is our last trade. Hopefully we can get this because we need a payout. So if we get this, we will receive a max payout. So let's see. Oh, so look, here's an example I want to show you guys. We inverse this gap at exactly 10 a.m. Never take a trade where your entry candle is 10 a.m. Is 10 a.m. or 10 a.m. 30. Never take that. If you would have taken that, your stop loss would have been around here. You would have got stopped. So I always try avoid those types of trades because they're very low probability, because literally 10 a.m. opens and you're already about to get a setup. So it's just really low probability, and yeah. Okay, so we're literally just, I don't even know what we're doing. So now we finally have this gap. It's a big gap as well. This is our first, if we were to inverse this, this would be our first valid inverse of the 10 a.m. So this would be around where and what we want to target. Our stop loss would, so we don't need to front run this because we're pretty far away. The stop loss would be 25 points exactly by the looks of it. Yeah, so I'm gonna wait for this to get, oh, well, Okay, we finally inverse it. Here. Stop loss, this is the last body, so 30 points, targeting right here. Now, this is all we need for our max payout. 500. 0.4, I think 0.7. Yeah, so 0.7 micros. So if we smack this is our last chance of the week as well, because this is our last deal. Well, if we smack this, max payout. Let's see. Bang. It's that easy, guys. So unfortunately, on Friday, I took absolutely nothing. So I fried my last day of getting a payout, because after like we edged it here, I kind of just like, I was so tired, I kind of just dipped. I left my house, and then I opened my phone on this candle, and I was like, fuck. So that's unlucky for me. I literally griefed the payout because I left my home early. Like, that's so stupid for me. And it was also, don't forget, this Friday was OPEX, and it's a Friday. So this was kind of just like, I don't want to stay on the charts anymore, so I hopped off. It was OPEX, and yeah. However, there we go. If I were to stay, I would go to payout, but it's fine. Day 4 was BE, $0, and day 5 we just smacked for like 540. So there we go. We can now request a max payout of 1,500. We passed it. We should have passed it really on this day, but I forgot to risk because I was explaining. So we passed it in day 2. Then we took a trade on the funded, break even, boom, max payout, baby. It's that easy. So yeah, let's look at the statistics now. We secured our max payout on the week. So if you were a max allo, you would have smacked 1.5k x 5 accounts, which is crazy. I need to get analytics. So 88% win rate, not a single losing day. Bang. What a week this is. So for me, it was literally like this, except green, 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 break even, nothing. But it's okay. So yeah, generated 4.7k of profit, 88% win rate. I do believe actually that our loss was avoidable. I do think we could have had better stop loss placement, because we literally got stopped by like a tick, but it's okay. We still got our payout. So yeah, that is the strategy. Alright, anyways, for YouTube, that is about it. Hope you guys enjoyed. If you guys want to join the Discord, link is in bio. And yeah, peace out.